Eric Muathe with Muathe.com, February 3rd, 2017. Almost said 2016, but February 3rd, 2017. And this is how markets are shaping up. And it is about 3 hours to go before the close. Markets are trading with the Dow up 165. And so let's take a look at the charts here, see what we have. Now in this video, I'm also going to have a discussion on commodities, some major market stocks, large cap stocks, and also take a look at what I think is a big picture that is being given by too many stocks out there. So don't fail to check the last portion of the video as we continue on here. I might be combining part 1 and part 2 in this video. Anyway, let's take a look at the charts. We begin with the Nasdaq, and from a weekly standpoint, the Nasdaq is doing its best to hold above recent breakout levels. Even we can take this breakout here. So the weekly chart for the Nasdaq continues to be good. One thing I do note here is even with all the strength, as of right now, we are still unable to move above 69.1. Generally speaking, you'd like the market to stay above 69.1 if it is to record a substantial explosion. So right now, for some reason, yes, market's been moving to improvement to new highs, but the Nasdaq has been unable to stay above this 69.1 threshold. And just to explain, because I get lots of questions about where I get this number, well, let's just start off by saying, well, 61.8 divide by 2 gives us 30.9. It's one number I talk about right there. And then also we take 100 minus 30.9. We end up with 69.1. So the Nasdaq has been unable to close above this or stay above 69.1 on the weekly. I think that presents a problem visually for the market. Something is not right, would be my conclusion. Otherwise, if bulls want to see the market higher, they do need to push above 69.1. As I record this, I see the market still pushing to fresh highs. So that's how things are shaping up. We'll see how we go. I'll show you the hourly charts that seem to indicate around here the market stalls. So throughout the course of this video, I'll show you some hourly charts that might point to a market that wants to stall around current levels. We shall see whether that is correct or not. Unless the market can clear those resistance levels I'm going to be discussing with you. If we take a look at the Nasdaq from the daily standpoint, we can see that there was a resistance line here. That was a problem. Once the market cleared above that line, we can see we went on a nice short-term spike day to day. So this breakout above that blue line corresponds with this movement to all-time highs there. And now we are coming back and we seem to be finding support back above that line. So that's good enough support for a day-to-day market stability, or a market that is poised to test the highs, maybe even break above the highs. We shall see. And also Friday midday, we can see that the market is holding this RSI lows line, coming back and tagging that line there. So lots of support on the daily, which is visual evidence that the market continues to be stable at worst, bullish at best. So on the hourly, like I stated, I was going to show you why it might make sense for the market to stall around here. Couple of observations. Number one, take a look at this top side resistance coming in play hour to hour, even as the Dow is up 180 points. So that could be resistance. Take a look also at another line for the Nasdaq. It is a backtest failure line here. As you can see, once we broke below that level, the market pulled back, and now we are coming back and we've been back testing this line and failing. So this could create another resistance level. There's also a third line which corresponds with the recent break. So this line here, once the market broke below that line, we pull back, and so we are coming back to test that break line right there. And as you can see, This is so far being confirmed as resistance hour to hour. So as long as the market is unable to move above this line, it looks like around here we might see a little bit of a resistance based on that hourly chart. Let's take a look at the Dow. The Dow is definitely the one with the best looking charts. So what we are seeing here is the Dow is back above. It spent most of the week trading below 69.1, but ending the week back above 69.1. That's a sign of a strong market. Also, we are seeing that the Dow is back above the previous high. In other words, the breakout from last week is being defended. The market was below that price most of the week, but is now wanting to close above it. That's a stable to good market. So in other words, as long as the Dow is holding above 19,000, scratch that off there. So 19,963.80, which happens to be this weekly closing high. As long as the Dow is above this level, that's a good market. It means that the breakout continues to hold, and as long as the breakout is holding, we have to respect the potential for higher levels. We also have to respect the potential for higher levels as long as the RSI on the weekly remains above 69.1. If we take a look at the Dow Daily, we can see recently there was an improvement to all-time highs day to day, but that came at the expense of the RSI making a lower high. That negative divergence is the reason why we got this shallow pullback. And also we can see that the market did come back to test that RSI 50 level, and it looked like it was going to break below that, but did not. So here we can see support at RSI 50 with uniform action for that re-entry. And recently, over the last couple of days, we held above the RSI 50 level with uniform action for the lows there. And also we can see that there's another RSI lows line of support, which is this line here. The market came, tested that line a couple times this week and held, and since then we can see it's having a nice day as of Friday. So day to day the market looks like it is holding and doing exactly what the bulls need the market to do. If you're looking for reasons for a pullback, it's going to be on the hourly, just like we saw for the Nasdaq. If we take a look at the Dow Hourly, we can see that at the lows for the week, the market held the RSI lows line going back here. So we came and tagged that line, which corresponds with this price support. The market has bounced since then, and it also held on this line here. This was a nice entry in early November, and so we draw a line from there. This is what I call the uniformity principle. Check the description for more on this. So once it held that line with uniform action, that was good enough for the support here. Market has bounced since then. So that's where the lows for the week can be explained. Now if we take a look at the hourly, and keep in mind on my hourly charts I'm using RSI setting of 26, just in case it looks a little bit different from yours. Let's take a look at a closer view for this hourly chart. Go back to 3 months of data, and I think what's happening here in my estimation is if you take the break here, which corresponds with this drop, that gap down, and draw a line connecting the RSI highs, you see that we are coming back to test that line, which corresponds with this break here of the highs here. So hour to hour, we see another reason why the market could stall. Keep in mind the Dow just hit the levels above when the Dow was up 180 points. It's pulling back a little bit, maybe because of this resistance. That's one view. That's why I was saying the hourly charts indicate potential for resistance for anybody looking to take advantage of that in any shape or form. Here there was a recent break of the price here, and this break brought the market off the highs here, which are current all-time daily and hourly closing high levels. Market is coming back to test that level as of mid-Friday, as you can see. So until we can move above this line and the previous line, we can see that hour to hour the market needs to clear these two lines. Otherwise, we might be looking at potential for some type of a pullback. If we take a look at the S&P 500 on the weekly, it is doing its best to follow through. In other words, it broke out to all-time weekly closing highs last week, and now it is pushing and trading above the previous weekly closing high, trying to be positive for this week. Also would be a follow-through, a sign of strength. And so we can see here that for the S&P 500, as long as it remains above 2276.98, that is a good breakout. As long as markets can stay above that level, we can expect the market to be stable at the very worst. Now, just like the Nasdaq, the S&P 500 seems to have a little bit of an issue here in terms of technical strength. We've been unable to see the S&P 500 stay above 69.1. I think that presents a problem. It needs to be above this level if markets are going to continue higher. We can see the last high on a daily closing basis here did come with declining strength. In other words, we improved on day-to-day closing highs. The RSI made a lower high. That negative divergence could be the reason why we had a slight pullback. And over the last week or so, we've seen the market pull back slightly, but all it did was come back to test RSI lows line, something like that, and that held. So day to day, the market is holding exactly what it needs to hold. If we take a look at the hourly, just like we've seen in other markets like the Dow and the Nasdaq, if we take a look at the S&P 500 hourly, we can also see, similar to the other charts for the Dow and the Nasdaq, we are coming back to test this recent break that brought the market off the highs here. And as of right now, we seem to be stalling, or at least showing signs of stalling on that hourly line. That's why I was saying hour to hour. This is where we might expect a pullback. Take a look at the 30-minute chart for the S&P 500. And also we can see again the same type of resistance level based on this break here. So this RSI break brought the market off the highs here. And so we are coming back to test this middle of Friday session. So far we seem to be stalling. Could be a visual sign that the market stalls at the highs of the day, which is just a couple of minutes ago. One can expect some type of a pullback based on this chart. Just take a look at the S&P 500 monthly. One thing here, we can see that the S&P 500 is trading at 69, exactly 69 on the monthly RSI. Bulls want to see the S&P 500 jump above 69.1. The more it can stay above this number, that's going to be a full-fledged bull market. So bulls want to see the market hold above that level. Otherwise, bear would like the market to stall and not stay above that level. In fact, S&P 500 has the best explanation why that 69.1 level is important. Take a look at the last time here in 2013. Once we went above 69.1 during this breakout. So this breakout here brought the market above 69.1. We stayed above 69.1 for the most part until 2015, which is here. So that's why I'm saying this is a big deal. Above this number, and you can expect markets to be sideways, to stable, to bullish. Otherwise, failure to hold above this number on the S&P 500, then we can start looking for reasons why the market could pull back. And if I was to be honest with you, I think the market stalls if the S&P 500 is unable to claim the level above 69.1. Having said that, take a look at the Dow. Like I said, the Dow is the most powerful looking chart as far as the major averages in the US are concerned. As you can see, the Dow continues to hold above 69.1 on its monthly RSI, which might be the reason why we are looking at strong markets, especially on the Dow. And again, closer view, we can see as long as the market is trading above the 69.1 level, we need to give the market the benefit of the doubt to surprise to the upside. Otherwise, if the Dow rolls over and trades below this number, then that would be visual evidence that one needs to position themselves down for a down move, or at least for a bearish move. and we shall see. But as long as the Dow is holding above this number, I've been saying this for many weeks, the market continues to be stable at the very worst. So personally, I think this is the key. Above this, market is bullish. Below it, then we can start looking for reasons to be pounding the table and expect lower prices. Wish you guys all the best. Love you. Peace and blessings. E-A-C-S. Mwah.